During the financial year 2020, Elikhulu treated 13 million tons of tailings at a head grade of 0.3 grams per ton to recover almost 60,000 ounces of gold. We produced these ounces at an all-in sustaining cost of just over $600 per ounce, which I believe is exceptional. Compartment 1 of the Kinross tailings facility is now undergoing floor cleanup to establish the area for the construction of the enlarged Kinross tailings facility during the next year. So we are finishing up on Kinross in the next 2 years, and then we are moving to Leslie Bracken with the final 4 to 5 years of Elikhulu's life on the Winkelhoek tailings facility. The operation ticks all of the boxes in terms of low cost, safe, long life, with the added benefit that we are reducing our environmental footprint as we go along. The 10 MVA solar plant that we will construct on site in the next year at a cost of approximately 150 million rand will take care of most of Elikhulu's daytime power requirements and also further add to the operation's sustainability into the future. In the year past, we spent very limited capital on Elikhulu. In the next 2 years, we are enlarging the tailings footprint and also preparing to move to the Leslie Bracken tailings facility. The capital required for these initiatives is approximately 300 million rand split over the 2 years. Once this move is complete, the capital will again drop to a very limited number for Elikhulu. Also worth noting as a final point on Elikhulu, that the operation generated almost 1 billion rand of EBITDA in the last year at a much lower gold price than the prevailing spot. In terms of financial year 2020, despite Corona, the year was a year of delivery for Pan African. That is demonstrated in our safety, financial, and also our operational achievements. Even more encouraging is that we are increasing our production guidance for the year ahead to approximately 190,000 ounces, an increase of some 6%. 100,000 ounces from the Barberton complex, 60,000 ounces from Elikhulu, and 30,000 ounces from our 8 Shaft pillar operation, which is now steady state. Our all-in sustaining costs for the year that's passed was badly impacted by hedge losses and also by the impact of COVID-related production losses. But I think on an absolute cost basis, our costs are very well controlled. As we mine more gold in the next year, the unit costs for all of our operations should also decrease.
The group's results for the 2020 financial year. Evident is the increase in turnover by 26%, resulting from a combination of a 1% increase in gold sold and a substantial increase in the dollar gold price by 24% and 37% in rand terms, following a 23% year-on-year depreciation in the rand-dollar exchange rate. Although earnings increased year-on-year by 17%, the 2019 comparative financial results included an impairment reversal of 18 million, which, if eliminated, shows that earnings actually increased by 93%, as is reflected in headline earnings, which under these circumstances is a more appropriate indicator of the relative performance. These impairment reversals relate to the commencement of Evander's 8 Shaft pillar project, following impairment of the 8 Shaft complex in the 2018 financial year. Adjusted EBITDA, which also excludes impairment reversals, increased by 52% to $87 million, enabling the reduction in net senior debt by 52% to $62 million, relative to the $130 million owing at the end of the prior financial year. Both in dollar and rand terms, all-in sustaining cost was adversely impacted by the COVID-related production losses and the inclusion of realized hedge losses. In anticipation of possible losses and associated negative cash flows resulting from the COVID-related operational disruptions, we defer the repayment of the last 5,000 ounces of the gold loan to the first quarter of the 2021 financial year. Fortunately, COVID-related disruptions were well managed, with limited negative cash flow consequences, and we ended the financial year with $34 million in cash, relative to the $5 million at the end of the prior financial year. The new Egoli facility's first drawdown is anticipated in November 2020 and entails 400 million rand in the first 18 months of the project's development, followed by 800 million in phase 2, which will be drawn down in the last 18 months of the project's 3-year development period. The Egoli facility's redemption profile of 24 months is sculptured to the cash flows generated from the project and should not curtail the group's ability to continue paying dividends from the cash flows generated by the existing suite of operating mines. The 2020 financial year was no exception to rand gold price volatility, where in the first half we saw a modest 7% increase in the rand gold price to 683,000 rand a kilogram. The second half saw a stellar 45% increase to 991,000 rand a kilogram. The group's debt is rand denominated, and with evident volatility in the rand gold price and onerous debt redemptions of the 2020 financial year, our risk was a reversion in the rand gold price to below 650,000 rand a kilogram for a protracted period of time, leading to covenant breaches and possibly an inability to redeem the senior debt obligations during this period. As the gold price progressively increased during the first 9 months of the financial year, we increased our hedge levels to approximately 50% of the guided production to ensure that an adequate cash flow margin is locked in for both debt redemption and an increased dividend, while at the same time being cognizant that some upside would be sacrificed in the event of there being a substantial spike in the gold price in the short term. We keep our hedges short-dated and base these decisions on risk management principles rather than a specific view of the gold price's prospects, least of all the probability of a global pandemic and its likely impact on the rand gold price. With a substantial spike in the rand gold prices in the second half of the financial year, realized hedge losses of $12 million were incurred and unrealized hedge losses of $10 million on the remaining 50,000 ounces hedged for the second half of the 2021 financial year. Unfortunately, the profit and loss impact of these losses was exacerbated by a COVID-related production loss of approximately 10,000 ounces with a value of approximately 300 million rand, which would have materially offset the P&L impact of the hedge losses. The remaining hedges for the 2021 financial year comprises 26% of guided ounces with a floor price of 708,000 rand a kilogram and a ceiling price of 926,000 rand a kilogram, approximately 12% below the prevailing spot price of 1,050,000 rand a kilogram. Post-December 2020, the group is unhedged, and with the 52% reduction in net senior debt in the past financial year, anticipated rate of deleveraging in the current financial year, future hedge levels will be more in line with policy guidelines.